Hello and welcome to LedgerCast. My name is Brian Krogsgaard. I got a special guest on the show today, Dan Matuszewski. He's CMS Holdings on Twitter is how you'll know him, but well known in the space. Before we get to Dan, I want to say thank you to Matcha, our partner for this episode and all episodes of LedgerCast. It is quite simply the easiest way to trade on a DEX in crypto, and you can just go to ledgerstatus.com/matcha and try it today. It's so simple. They pull liquidity across every platform that you would want to use, whether it's Uniswap or Kyber or SushiSwap or wherever. We'll learn about how Dan's trading and how he's approaching DeFi as well. But thanks to Matcha for being our partner for this episode. Go to ledgerstatus.com/matcha to make your first trade there today. It's the easiest way to do it. Dan, have you are you a big DEX user?
So we do a lot of automated trading against DEXs.
So you're arbitraging the DEX. You're providing a valuable service.
Yeah, we make markets efficient. I'd say that's our primary interfacing of it currently, is like activity along those lines. That being said, like sometimes you can only get liquidity in certain names on DEXs. So like we do get forced into like using them on that side. I mean, like we have nothing really against like Venue or like Way that will like participate and like face the market. It's just in general, it's so much cheaper execution on the centralized venues that like any of the larger stuff that's like liquid, like we're almost always still using like futures and derivatives in particular to like get execution on. But like we're doing more and more stuff on the DEX all the time. Like we're very active now in a lot of these perpetual products that are being built on top of chains, right? Like there's a couple, there's Derivadex, there's Perp.
Yeah.
There's I think DYDX has been announced today. They're taking down a round with the Three Arrows guys.
Are you part of that round? I just saw the news come across.
We're not, but we know those guys pretty well. We're like looking at that as like another solution. I'm pretty confident there'll be like a fairly robust liquid on-chain derivatives venue.
Are they moving to layer 2 as well? I assume everybody is.
They have to. It's just not possible otherwise. Like it doesn't work.
I took a trade on DYDX, I think it was, like once, just to play the airdrop roulette.
Right. I think everybody did one.
Yeah, but I think I spent like $300 getting in and out to be in a trade for half a day or something. I don't know. It's just like this layer 1 stuff is crazy. Hey, we're gonna come back to all that, but first I want to get people that may follow you as CMS Holdings, but they don't know your history, how you got into finance and trading, and how you, I assume, made the transition to crypto. Can you give us the 2 or 3 minute spiel on that?
Yeah. So I come to this whole thing from a markets background in the sense that I was a trader at a hedge fund that was doing primarily market making and volatility arbitrage. So we traded single stock, S&P 500 options, and like all the names and the constituents of that. But that was like really where I like first heard about crypto. This was like late 2012, and then it was just Bitcoin at that time. And there was an exchange called Bitfloor, which is now defunct, many years past. But they had what was like true maker-taker pricing. So you got paid to provide liquidity on the exchange. And I was doing a lot of the automated delta hedging for the options book. That was like sort of my role. I was like on the programming like side, like doing a lot of that market. So I was like, look, like this is way easier than trading stocks just because it's like so inefficient. Like really the only liquidity point was GOX at the time. So I was doing a ton of trading activity on Bitfloor against sort of GOX and like that, like a little bit of like automated trading relationships there, and then some with Kraken as well. So that was my first foray into it. So I really didn't hit this thing from like any, like I wasn't a super libertarian or like a gold sort of not before. Like I just was like, this is another risk asset that moves around a lot, and like it seems that people are interested in it. But it just like so happened that started to coincide pretty shortly after with that first run up in 2013. So that got really big, really fast, in the sense that suddenly now this was like real numbers moving around. It wasn't huge though, still very tiny by like today's standards. But I was like, people really care about this. This is like interesting all of a sudden. So the fund at the time that I was at was like doing okay, and I was pretty young. So I was like, all right, well maybe I'll take like a flyer and just like go into this industry. there wasn't a ton of real roles you could do in the trading side at that time. Like there was a couple of shops that were like trading it, but not really. Nobody was making enough money that like anything was like standing on their own feet from a trading side. So I had gotten to know Kraken really well because I was doing a ton of their volume with the same sort of activity that I was doing with Bitfloor previously, and got to know Jesse pretty well. And he offered me a job to go with Kraken. So my first jump was in Kraken, and this was pretty early on. And before they had just gone live, they had just taken out a Series A. They had like a little bit of money in the bank and worked there for about 6 months. And then Jeremy and Sean raised their A for Circle, which in the beginning was like super mirrored in mystery. It was like this Bitcoin app, but like nobody knew if it was a Bitcoin app. This was like early 2014. It was like it was weird, right? If you were around, like remember, like they wouldn't tell anybody what they were doing besides like it had Bitcoin and they like raised some money, and they had some like real VCs that were behind it. So, and Jeremy had brought a company public before. He was like sort of a known individual in Boston. I was living in Boston at the time too, despite like I was working in Kraken. So I was going back and forth to San Francisco and Boston a bit. So anyway, got to know them, jumped on, and ended up staying at Circle. It was like going on 5 years at the time. So when
so you joined
finally,
Circle in 2014, like at the start of the bear market?
Yeah, it was like very much in a bad period for crypto at the time. Like when I got, so like most of my years of being at Circle were actually not great years for Bitcoin. And then I did, however, stick it out through 16 and 17, and then ultimately like 18 as well. But like we made just a gargantuan amount of money in 16 through 17 through all of our like basically all of our liquidity providing that we were doing, and most of that was high touch OTC related activity. And the thing about OTC in particular in 2017 is when things got really hectic really fast, all the exchanges just like stopped onboarding people, right?
Oh yeah.
Like Coinbase wasn't taking people, like Binance, people were like selling Binance accounts on like
top things, man.
So yeah, but like because of that, a lot of order flow went through us.
Yeah.
So like we were trading many days more than like Coinbase was, and like just colossal. And we were a ton of Coinbase's volume as well because we were trying to like arb things out in the market as well. So anyway, we did very well through like that period, and that was like really where we sort of cut our teeth like through that market. But like we were around through 14, 15, 16, like all those like sort of slower, more quiet years, which is funny because like I just like when crypto slows down, or like I don't know if it like falls down a little bit like these days, like it's just funny to like look back and be like there's nothing going on for a really long time, and like everybody acts like only like the last couple of years were like really what crypto was, but there's a pretty rich history beyond all that stuff where like things were like a lot quieter, yet like sort of the asset class was still there. So anyway, let's Circle and I want to say early 2019, and went into starting CMS with Bobby Cho, who formerly ran DRW, Cumberland Trading, which was the other big OTC desk besides Genesis in the States. And a guy named Julian, who actually worked with me at the hedge fund even back in the day, and then went to work with me at Circle. And Julian's sort of the technical lead for everything. Like he's more in the background, but he like operates all of our, he like runs all of our engineering. He built like all of our tooling, like all of like the reconciliation and automated like trading tools. So it's the three of us, and then we've like slowly brought folks on. We're about 9 now. Probably grab a couple more heads by the end of the year if like sort of things continue to go the way they're going. And we operate with partner capital, so we have a pretty wide mandate in the sense that we can do whatever sort of we think has edge in the market at any given time.
So partner capital, for people listening, that's you're trading your own funds.
We trade our own funds, yeah. Like we're actually not even technically structured as a fund, but like we sort of say it just because it's easier to like think about. But we like really just trade the whole thing out of like the GP parent. And look, there's good and bad. There's bad in the sense that like if you like screw up, it's like obviously you got your own money. So there's like that nerve-wracking aspect. So it's good though in the sense that we don't run into any headaches with what we're looking to do. I mean, I know this has been a problem for a lot of other funds now that DeFi has gotten bigger in particular, but even like more like some of the other on-chain stuff or like other venues, like they can't trade certain places. They have to custody certain things. There's rules around like what like, and those are all good for when you're handling other people's money. But the speed at which this industry moves, it's just been it's made a lot more sense to just be moving as quickly as possible and like acting wherever like you see the edge is, at any given time. So that's like sort of our background. And like, that's like the foreseeable future of like how we're going to like operate this thing going forward is just like, where do we see edge? Like, what do we think makes sense? Like, we have a pretty long bias, like as most people in this like industry do. So we keep real balances and like all these assets that we're trading at any
So you're taking a long bias risk all the time, whether it's spot or futures or investments. You're not trying to hedge out every piece of risk to purely pick up the arbitrage or market making or things like that, right?
Right. Like, we don't run this thing delta neutral. Like we'll take risk off at times, and like we'll go. We were like talking a little about this.
You could be
before,
directionally like, short, but you're going to do it on because you have that bias.
Yeah. Right. Like, basically you're like tapering away from like what you consider like a core position. And like really like the most bearish thing we ever do is like we'll just get like really short the quarterly futures as like just a hedge of like things like potentially imploding. Which is like something we were like talking about a little bit before we like sort of kicked on. But yeah, like that's our background. We do a lot now. We always did, but we've done a lot more now of the new issuance side. So we fund a lot of like token projects that are out there. We do some equity deals. We're doing a little bit more on that. In general, like we're looking for things with more like defined liquidity horizons. So we're really not doing as much sort of on like the equity raise, but that may change like as balance sheet changes and like opportunities open up.
Well, I've heard Meltem did a thread just the other day talking about how competitive these equity raises have been. Are you noticing the level of froth in the venture market as there was in early 2018, late 2017?
It's not as crazy as that period, but like deal prices are getting higher and like numbers raised are getting higher, which makes sense, right? Like there's a lot more money clamoring to get into deal flow. So like the natural progression of that is just going to be, all right, well, the valuations are going to start getting more expensive because like founders can raise at better terms and they're going to take more money at that, right? Like they're just like, it's just sort of how these things go. I would say we haven't seen what happened in 2017 where like the quality of projects just degraded from it's just like like we went from like Cosmos and Definity raising like $5 million to like a random website that was going to make like food on the blockchain raising 100 million, right? It's just like it happened very quickly. We're not, I don't think we're at the like ridiculous phase yet, but it's the beginnings of like valuations getting a little higher. They're getting rich-ish, like not crazy to all-time historical, but like crazy, like they're significantly higher than they were 6 to 12 months ago.
Are you and Bobby managing the majority of the investment strategy? And you said Julian's doing a lot of the back end stuff.
Yeah, doing kind of like all the technology side. I mostly deal with the liquid book, so like all of our positions that are sort of actionable at any given time. And then Bobby's dealing with the portion of the portfolio that you consider like more venture, so the stuff that's like not liquid and like on some vesting and like that's longer dated. So that's like sort of how we break the book up. But we all sort of dip into each other's like lanes a little bit here and there.
Right. Yeah, that makes sense. So let's dig into the liquid side of things. And in particular, this is one of the big questions that I have talking to people about DeFi. You know, sometimes something comes out and, you know, forgive me if this is one that you're in, but like the graph, and it's very popular. It was well funded and it comes out at this enormous multiple, right? Like relative to word on the street about what the fundraise was. So you have this balance of great technology and people who are funding the in enormous profit. And then you have this liquidity event, and we see the same type of stuff over and over again, right? Like something gets listed, especially if it gets some kind of perp on like FTX. And there's all this speculation, like, are the investors shorting this to hedge out their initial investment? Or are they going to dump on us? Or can I be comfortable investing in this? And it doesn't have to just be the graph. It could be any of these, like something like as big as Polkadot that came out. When you're approaching liquidity for an investment, what are the things that you think about and the things that you're willing to share with us about that process?
Yeah, I mean, like the biggest is valuation, right? Like there's like a number that like it doesn't make sense,
right?
For everything. I mean, everything you own at some like level, like you have to look at it and be like, all right, like there's an all-in valuation of this thing where like it's clearly disconnected from any utility sort of it has. I mean, like I would say we like don't put like Bitcoin and ETH sort of in that category as much because they're just like the base assets of like the ecosystem. But like the graph's like a good one. Like we don't have any dog in the fight with like the graph at all. But like it's a very useful token. But at the same time, like all right, like is it going to consume the entire space? Is there not going to be any competitor to it? Like some point that valuation number like doesn't like jive. And like you got to really look at like what's like all right, what percent of the supply is really out there, and like how much of this is like going to be hitting the I mean, like we look at the unlock schedules for everything that we're trading that's like not mined. Like it's like a really big input for us. It's like, all right, like,
okay, this is actually the most fun because you don't have to release, you know, it's obviously much more proprietary. How do you handle your own investments? But I love it. This idea, since you're not in the graph, we can totally have fun with it. Like the token price, it was cheap. I don't remember what, something like 3 cents, you know?
Right.
So then you get this popping up and it's quite liquid. It's both longable and shortable, and you probably have some understanding of unlock schedules for those investors. And then, of course, it immediately like hypermoons on the list. You know, pulls like a 5x multiple out of the gate, and obliterates the earliest people attempting to short it. So,
yeah, like so as a rule, I would just like I don't understand people that like I get it. You can make money doing it, but people who go in like short these like assets with like low float that are like just flying around, like you're just like asking to get like body bagged, in my opinion. Like I just like if you don't like it and you think the price is wrong, don't do anything. Like I think that would like save so much people so much agony in like somebody like unless you're a bona fide hedger, like I don't entirely understand why you're like you get angry that like the price is there and like I get you maybe you'll be able to like move it, but for the most part you're just like gambling whether or not like the mania in the market will like persist, and like I just think that is like gambling a lot of the time.
Yeah,
like we almost never go short single names unless like there's a very good reason that we think supply imbalance will be like changing shortly, or if like it's an actual bona fide hedge.
Yeah. Okay. So in the bona fide hedge perspective, let's say this was yours. And you are like, hey, we can lock in a 100x on this thing. And the danger there becomes if you get squeezed out, or if you have to put up, if you have to post like 10 times the collateral that now you're just waiting on, you know, this trade to play out, and it could go on for who knows how long, like a year. Are those the considerations that you're going to take on when you're looking at that type of play?
So if let's say I had a bunch of graph and it was gonna like vest, then I was gonna like hedge a portion of it, which I may do if it's like up like that like tremendously. Like it's you really gotta look like, all right, like how long am I going to my unlock? Like how much do I have to reasonably post against this thing in collateral to like sort of make this make sense? And then what happens if it doubles? Like what happens if it triples? Like so you end up, I think most people that like do any of that like hedging of that or like they end up doing far less than like people out there in the market think. Like I think there's generally like this like sentiment that like, oh well, the early investors are like hedging, and it's like no, like it's like actually like very complicated if you like want to like sell a bunch of these futures and like manage that position, and it's a ton of collateral, right?
Right.
Like you would minimum have to be like, I would be shocked if you were posting anything less than like 2x. Like, so if you want to sell $1 million worth of graph, you should be posting $2 million easily, and you should easily be able to get another 2 million in there in like a pinch if you like need it.
Right.
So like it's very capital inefficient in the sense that that money can be used elsewhere too, right?
Right.
So like that means you're not doing something with that capital that could be valuable like elsewhere. So I think there's like much less shorting of the sort of early investors like float out there. But like what people will do is like they'll start to sell down futures as it gets closer to the vesting date, right? Because then like your time that you have to like manage this thing is like much shorter. Like that makes a lot more sense.
Or
so
as the market finds itself a little bit, maybe, you know.
Yeah, but you still got such like gap risk.
Yeah, that makes sense.
But I think like 2 to 3 weeks before the like liquidity event will come, like people will start like taking risk off. Like you'll see that. That's why like I also think that people overemphasize the concept that like there's an unlock and then all of it gets like hits the market. It's like a lot of that actually like bleeds out earlier. I was pretty vocal about this with Solana, but like we just had like a lot of color on it beyond just like it was coming up. But a lot of it got sold ahead of time. Like
yeah, so everybody thought like this is going to dump because it had this huge unlock, and they had already done most of the selling that they were going to do.
Right, exactly. Like the market had already like absorbed that activity. It's not like, I think people think about a binary where they're like, oh, it like all hits the tape on one day and it like finally is like out there. And like, but it's like, no, like the market participants are like, they're a little more savvy than that. Like they like have been able to like sort of, like a lot of it's sold OTC bilaterally, which is like a better do if you're an early investor anyway, right? Then you don't have to manage any collateral. You just have like some counterparty exposure that you have to deal with. But like generally like those folks like trust each other. And like the other way you could have done is like you could have sold some portion of futures in there. Like I would say a lot of the risk, if you look at like the 6 months leading up to the unlock, like a lot of the risk came off the table then. And like that's why prices were like sort of lower, because like there were definitely people that were sort of taking that, like there was supply in the market coming through the early sort of people that were like up on it. But then like the event happens and it's sort of a non-event because like that flow is hedged. And if anything, it's too bearish because you have a lot of retail folks thinking they're smarter than the market, saying like, oh, it's going to unlock.
They're going to short the unlock.
Right. And it was massively short going into it.
Yeah.
But the supply was already eaten. And then it's like, all right, now we got to like about face and like turn this whole thing around. So I don't know. That's like a typical one of like where I think you actually see like an orderly like working out of like the supply like as it goes through.
Yeah, that makes a lot of sense. So what's your day-to-day look like? If you're on the liquid side, you're obviously paying attention to flows and whatever strategies. Are your strategies mostly automated, or is this Dan sitting at a computer clicking, or what's the day look like?
It's a lot of clicking. Like we do a lot of automated stuff in the DEX space. Like we'll like arb a lot of the DEX pieces that we see have edge. That's mostly good because it's like low hanging fruit still. Like, and it's just not picked over by like all the like professional arbitrage guys. And like we're just in general like there first. So like it's like worked and like it's making money. So we're just gonna keep doing it. But really all of the like trading is still done high touch. So like we click trade a lot of it, and like we like actively like manage the positions, and there's like 3 or 4 traders at any given time that are like sort of like talking through stuff. Again, a lot of this is just like revolving around like where do we see the financing, like where is the perpetual like paying or who's getting paid, and then like what is the like roll down of the quarterly future like look like what is like margin usage, like where is the cash market, is there a bid in it, is like that trading significantly and like consistently over spot, like because then that means like there's somebody in the market like actually putting a position on. So like really that imbalance between like the futures and the perps in particular against like cash markets is dictating a lot of like our short-term like risk and decision making. We don't do like TA, we don't do a lot of like sort of chart analysis. It's really more just like what do we see the flows are, and then like how do we think that's like playing out in the market like at any given time.
So can you touch a little bit on what you were telling me earlier about the comparison between the funding rate for future or for perps and then the spread on premium, and how you determine whether that's exposing froth in the market?
Yeah, so I think the biggest way to tell how much aggregate leverage is like sort of like pumped in the system and like its level of froth is like you can look at the open interest and like get like an idea of like the actual dollar notional, but like how stretched is it is generally what is the implied financing rate via the futures curve, right? So like what is the quarterly future on OKX, Huobi, and Binance trade on an annualized basis relative to spot? So like what does that basically pay you? And then what is the sort of short-term perp financing too? Like how much are like longs paying to be long?
Yeah.
And like if that number gets over 30 or like even like high 20s, like that tends to be like a very expensive position to just like hold, right? Like I think we were saying this like on the earlier, like if you got a 35% sort of cost of like financing, like you got to double every 2 years to sort of like offset your costs on the thing. So like that's pretty expensive. That being said, like you can't look at that in a vacuum, because if the cash market is like roaring high too, right? Like if there's a ton of like new money like pumping into it, like financing may be really expensive, but it may be completely justified because like the cash market's just bailing them out. Like really, like the futures market is just like making a bet on like where that cash market's going to go. And if it is right and like there's a ton pumping through it, like it sort of doesn't matter that you're paying a lot in financing in the short term, because like the market's just clearly running with it. But like in a steady state where like you're sort of balanced between like buyers and sellers on the cash, like those stretch longs have to come in. Like that just can't like exist in la la land indefinitely. Like those people got to come down, and when they come down, they get licked, and that's like where all the margin usage like unwinds, and then it overshoots, and then it gets cheap, and then if it gets really cheap, it gets backwardated, and then like it's just chaos, and everyone's freaking out, and then you like people are on Twitter acting like it's the end of days, but like that is like historically been like the path of like what like things go, and you can like see it play out in the financing of the market at any given time. So
do you
like even right now, like Bitcoin's negative financing, or at least it was on a lot of venues this morning.
That's
like,
that was going to be my next question, is because it looks like everything except BitMEX on ETH is negative on token margin, and on dollar margin it's really come down a lot, and it's negative on FTX too. Where do you consider funding to matter the most? Are you basing it off who's biggest, like Binance and FTX, or how do you compare?
Generally you're looking at like where the volume is trading, because that's going to matter the most. It also matters in like what the collateralization is. So like a long collateralized against Bitcoin is weaker than a long collateralized in cash. And I say that in the sense that like that position is going to go pear-shaped much faster on the way down, right? So like what you don't want to see, and like this was like what we had for years, is a ton of long stretched open interest on BitMEX, because that's just gonna get attacked.
Right.
Like the larger desks are gonna just bury those positions, and they know it, because if you push it down, everybody's collateral drops, they get licked, and it just like cascades on the way down. So like that tends to be a much weaker positioning in the market than if you have like a bunch of cash exchanges that are sort of. That being said, like the larger venues now are almost all either stablecoin or cash like backed, like CME, FTX, Binance, Fobi, like they're sort of dominating a bit, which like makes it a little bit healthier, I think, in the market on the downside. I think that's also why you haven't seen like as gnarly swings, specifically in like the contango in the market on the way down, just because of like the way the collateralization is. But like there's still very large collateralized crypto venues out there that are like super popular. So
yeah,
it's not like something you don't think about. It's just MEX being out of the equation changed things a little bit.
And sometimes I think this probably changes with size. I'm not sure how it works, but I know, FTX is super popular because you can essentially long your longs with the, your basis collateral in almost anything, and then long almost anything. But I don't know if it's that way for like real money, like if people are a fund or somebody with 7-8 figures on exchange, like maybe they have better rule sets in place. Like I know BitMEX had leverage rules that were different once you hit a certain threshold as well.
They won't, like, generally there's like some sort of max position sizing that's like in place. And I think that's just to make it so that like one person can't do undue damage, but you can make multiple accounts so like people get around it.
Yeah.
But I think in general, like larger shops, just like risk is a little more buttoned up. So like they're thinking about that, like that sort of convexity that you have if your like underlying is moving around is a function of your like price. I tend to view this as a problem mostly for like retail.
Yeah, for
like
our retail folks here that don't know what we were even talking about, like if your collateral on a margin position, on a margin long, is in Bitcoin, and Bitcoin goes down 20%, you've lost 20% of your collateral, plus you're down a margin basis 20% on your position, so you're getting doubly wrecked, and you'll essentially get squeezed out of that position much quicker, is what you're saying. Right,
and like what happens is you get these cascading effects where like you got a bunch of that all piled up, and it all just like kicks through really quickly. So I would say do what you want, whatever feels works, but like collateralizing in cash when you're starting out is probably like a really good idea, just to like sort of give yourself like a little more breathing room. I don't know.
Are you trading options as well, or are you mostly in futures and perps markets?
We actually have a dedicated head who just trades vol. So like we have a full-time guy who specifically just trades like options. So he comes to us from, he traded crude options back at DRW in the day, a guy named Ryan Deuce. So we're pretty active in the vol space in that side. Like we're really using it more to make like outright bets on like what we think like implied vols are doing.
Yeah. So you're not often shorting volatility in this market, I assume.
At times though, like it gets rich, like it's completely like warranted. Like, or if vol's really rich, like we may just like go in and like sell a bunch of puts, right? Because like we don't care if we get exercised if it's down 15-20% anyway. So like we're
so
just
for somebody
like warehousing risk.
I think people are following us, but for somebody following along, when you're selling puts, you're short volatility, so you're collecting the premium for someone buying puts. So someone's like, oh, we're going to 23K, and you're saying, well, I'll sell you that premium, and I'm happy to buy Bitcoin at 23K.
Yeah, like that's a bet we'll do a lot where like we just like, cause like, look, like we have levels where we'd add risk anyway. So like I might as well just like sell somebody the right to like give me that risk there.
Yeah.
So like, I mean, that can go terribly for you. Like it can go right to 20K and then you got 3K in your face on it. But like we were going to probably take that risk anyway. Yeah. So like it depends. Like we are very active sort of in those markets, like looking at like vol at any given time.
Nice. Have there been any strategies that you've seen in options markets that have been super popular, or things that you had real effects on the market? Like that giga long 36K call position.
Yeah.
What thoughts do you have on the role that options are playing and gamma effects and all that?
You see a little bit of it, but like in general, it's still very small in the context of like the futures and spot markets. Like I don't think it's like the tail wagging the dog in any capacity yet. They're growing, and I think it'll get more towards that. I mean, like we've obviously put a dedicated head on it. Like we think it's enough that like we got to be paying attention to it and be active, but it's still too small in the market. Like I even just like derivatives like aggregate volumes like aren't large enough to be like moving around like the spot market still. Like I don't like, yes, you get like periods where like things like that matter, and like it also becomes like a little bit of like a market sort of like thing to just point to, right? Like people believe it because they want to believe it, right? Like they see it and they're like, oh, like, it's got to go. I mean, like really what we see consistently in the options flow space, or at least like going into this run up of the last like 3 or 4 months, is like there's just a lot of structured products selling out of Asia. Like in particular, like a lot of people that just like want to sell vol. And it's like mostly like guys trying to get yield on like their existing like crypto holdings. So we see a lot of that, and like being the other side of that was like really good, like at points. I mean, like we'll wind up and get really long vol if it like goes in like the low 40s, like mid 40s. Like if it ever touches like 30s, we're like usually like loading up a ton on it, and like you get cracked at it every now and then where you can like buy a ton of cheap vol.
Yeah. Why do you think, what is the deal with the Asia general sell pressure, or they may be risk on, but they're not as aggressively buyers as the US has been? Do you think it's some of it could be correlated to miners being in massive profits and it's miner centric, and maybe their retail people are just as risk on as we are? Or what do you think is playing into that? Or is it all a meme?
I think it's a lot of it's a meme. I stoked the fire on it like big time, but like I don't actually really believe that there's like this huge. I do think you do have like, look, like most of the new issuance is coming out of there, right? Like there's the most likely hedging and or like selling of new issuance that's going to come out of that region. Like you just can't deny that. So, and you've also just had like a string of like very large cash purchases in the States, which has like dominated sort of the tape. So like that is true that like you've had like the larger allocation cash buying on the state side. And then but I think retail is like generally acting the same in like both. I don't think there's like a huge dichotomy between the two. I just think like you have that fact that supply gets like pulled out of the ground there, and like you just had some really large chunky buyers in the States that like sort of get a lot. I don't find any discernible difference between the two, having done this like 7-8 years now. Like there's no like preference like that I know of beyond the fact that there's like supply like out of that region always.
Let's just keep knocking out some price memes and market.
I'm gonna keep doing it. I'm gonna keep harassing them.
No, I love it, but I wanna get your take on another one, which is the GBTC premium.
That's come in a lot.
Yeah, it's it's super low. I started allocating to GBTC purely because of the premium was so low, and I was getting a little bit of a discount on Bitcoin. Now I'm willing to be patient. Grayscale's been taking in multiples of new Bitcoin that get mined if you're just trying to, consider inflows and outflows. Do you think this is the primary vehicle that institutions are using to get Bitcoin exposure, or is this just a trade where people that are long Bitcoin are willing to take that premium off the top every 6 months? How do you think this is being utilized as a product? I
think the primary is guys doing the ARB. So like it's like-kind creation against Bitcoin Borrow to then smash the ARB. And like so the end buyer of the ARB is like, it's mostly retail and tax advantage accounts. Like, but that being said, there is like a lot of like institutional sort of interest in the product because it is like one of the few ways you can hold it, but they just come in and buy it via NAV. Like they're not buying it on screens with the premium. Like some are, but like if you're doing some real size in it, like it really just makes sense to buy it at NAV. But
right.
yeah, I think
let's
like
describe
most of
this.
That is,
let's describe this for our listeners real quick. So, certain investors, if you're accredited or an institution or whatever, you can get GBTC at NAV. This line on my chart, Dan, I don't know if you can see it. It is the premium, and that premium has come down over the years, but really come down relative to the hype in Bitcoin recently. That premium institutional investor does not have to pay. They get the underlying Bitcoin at Bitcoin's actual price, called the NAV, but they're locked for 6 months. So they have a 6-month carry that they either have to hedge out in futures or they have to just be willing to be long Bitcoin, right?
Or you can do it with borrow, right? Like if I borrow 100 Bitcoin from somebody, I can just go create shares in kind.
Yeah.
So you can give Bitcoin to Grayscale and they'll just give you shares.
There you go. And then essentially their goal is after 6 months to be able to collect that premium, which I mean, prior to recently, what was it? It was kind of a floor at like 10, 12%, wasn't it?
And you get 2 cracks at it a year, right? So it's a 6 months. So like if you think about it on an
just kind of wait.
Basis, yeah, you get like, well, you could do the cycle twice, right? So if you're paying 6% interest, you only need like 3% every 6 months to justify it.
Yeah. So you think that ARB is essentially the primary driver. One of the questions I had though is, well, I feel like this is the easiest way for if I was a corporation. Like I think the Sailor method of like going and TWAPing Coinbase makes no sense, because if I can just get direct issuance from Grayscale and get the custody taken care of, like aren't my risks way lower? And I've got my stuff all wrapped up in a security I can dump as long as I have a 6-month window.
Yeah, but Sailor's like specifically made the point that he's not buying securities, because if he were buying securities, he'd be like some different structure, right? Then he'd be like an investment company or something like that. Like, so he needs to buy physical specifically for like
because
him
of
to
his,
say that he's not like, well, for like status, right? To like say that I'm a tech company.
Yeah. And maybe if a company has certain rules around investing in securities versus investing in currency or commodity.
Right, which there generally are around like what you can use as like your treasury assets and like what you're allowed to invest in. So it makes a lot of sense if you're somebody who's looking to build a position who's like normally a buyer of securities anyway. I think that makes a ton of sense, and you've seen a lot of that in there. But like really, I think historically this trade has just been, it's retail trying to buy in tax advantaged accounts, and then like some smaller like sort of funds that are looking to put like positions on. And that's like what keeps the premium in it, because like it makes sense. Like a lot of people are pigeonholed into this is like the only way they can buy it for like those vehicles. And like the tax advantage account is definitely the one that like makes the most sense, where it's like, well, like I got to own this, like I'll just like pay the management fee and like pay a little bit of premium, and this is like the only way I can do it.
Yeah.
And then like that, the premium existing is what causes people to create it, right? So then like you get a sustained premium for a period of time. People come in and try to arb it, and then like they try to do it for more size and yada yada. And then, I mean, right now you're just feeling like a small imbalance where there's more shares created to smush the premium than there are buyers of like premium Bitcoin. But like, I mean, look, like Bitcoin's been trading down the last like 3 weeks too. So like there's just like net less demand for Bitcoin in the market. I would say in general, like if you're somebody who is looking to do this trade at all, now's a great time to do it though, because the premium is like pretty damn low historically.
Yeah, that's why. I mean, I am that retail person that you mentioned, but I'm like, hey, I've got tons of Bitcoin exposure in untax advantage accounts, but I can throw some money at GBTC and tax advantage accounts, and like I'm much more willing, to play and dance around there in some ways that it's harder. And if I can do it with a couple, like I think I bought it on days where it was like 2% premium. I felt like I was getting a pretty good deal, even if Mr. ETF comes and blows this trade up. Do you think this trade is at significant risk if an ETF is approved?
Well, I think this will become the ETF personally.
Really? I like that.
Yeah, I mean, they've talked about it in the past of like Grayscale talked about trying to convert it to an ETF. I mean, like if you're the SEC, this is kind of the easiest way to do it, right? Is like all the AUM already sits in this thing, and we're just gonna like figure out how to like move it over. At minimum, it'd be weird if they didn't let it convert to an ETF.
Yeah.
Like once they were allowing another one. So I think it'll just become an ETF at some point. So like I don't have a ton of concern that you're gonna have a prolonged, persistent discount to NAV that like closed-end funds like trade at. I think this will just like convert to like a vehicle that like has daily creation and redemption anyway. So I'm not super worried about that like tail risk like discount. And also like, I mean, most people I think are willing to warehouse it and they'll just wait anyway. So like you're just like, it's just a temporary thing that you would potentially be going through. I don't know. That's sort of how I see that all playing out, is that will eventually convert over to an ETF.
Are you interested in playing and doing any of these trades yourself? Another one that
we do these trades. So
okay.
like we're active in them now.
Okay. So another one that's fun is the Bitwise, the BitW. Man, I was watching this thing and I think the NAV was at 17. And on day one, I was like, if this gets below 20, I'm doing it. And like, I think it got to 25 whenever I was looking at it. And the sucker just went to $200 or something. Of course, you're locked up for a year in this if you got early issuance. Do you think a product like this can maintain the premium through, or
no?
So this is just going to get creamed as soon as that year comes up, right?
Yeah, it's not going to stick.
Okay.
I mean, like, nobody knows things, but like, I would be shocked if it's trading at a significantly jacked premium after like shares get. I mean, people are creating it right now. Right. Like, I mean, we're looking at it. Like, we're looking at that trade. Like, we haven't done it yet, but we probably will, just because it's a good place to like stick a bunch of our long exposure we have anyway, and then like harvest whatever that like premium is in
whenever
a year. But yeah, I mean, like, it's just like that's not gonna last. Like, which is the whole like backdrop to this whole thing is that's hilarious. Is that the SEC finds like an ETF too dangerous for like retail. For like
this is so much more dangerous than an ETF.
It's like it's a guaranteed fleecing, right? Like you automatically have to like pay over. It's just like so not like, I don't know. Like, how is this the better solution?
It's not to me, but it makes sense. I'm glad to hear y'all are active in this and have thoughts on it. When the ETF comes, do you think an ETF, one, will it be a big market event? And two, do you think it's due for 2021?
I think it'll be a big market event. I think it'll be less than if we had it like 2 years ago, just because Grayscale has gotten so big and it's like sort of just become the ETF. I think it sucked up a lot of the latent demand that people thought would go towards an ETF. But that being said, like an ETF is like a whole newer, like sort of, it opens up a lot more, even still like potential like investor class. So I think it does matter. And I think it's like it is a market event. Like you don't sell it. Like it's not a bad thing.
Right. Yeah. There are certain tax accounts like, or like retirement accounts that they don't have access to OTC. So they can only do ETFs or mutual funds. And
I'm sure there's fund mandates that don't let people trade GBTC or pink sheets in general. Yeah. So like it's a bigger deal. And like the creation or redemption will get the premium out, and like that'll be like a real liquidity point it'll probably be the liquidity point for like the US session. But sorry, wait, what was the other part of that question? I can't even remember now.
Well, the big part of it was
this year.
Yeah. Well, yeah. Do you think it's going to happen this year?
No, but like I only think that because like you've got a long comment period nonsense that's got to go through. Like it's also, you've got a new regime coming into the SEC, and like I just generally think that this is not a high priority for them. So I do think we'll get it in this next 4-year run of like sort of the administration. I just don't think it's going to be something that's super bumped up and pushed through in like very like I'm just like, it's possible. It's like way more possible they would have gave it for last year, but it's not like in the realm of like I think it's going to happen. It's still like I'm cautiously optimistic. So if I had to like assign it, I give it like a 20 delta.
Okay. And then my next question is, Bitcoin is going to be first to kind of, make these less interesting, but it could be quite some time for altcoins and stuff. So are you really interested in ETH or any of the other, like if Link comes out, any of those, like, is that a trade that y'all will be super active in?
We've done the others too. Like you size them accordingly, but yeah, I think those will persist longer because it's like getting a Bitcoin ETF is like a deal, but then like, I mean, it'll probably be a very long time till there's a Link ETF, like maybe never. So that it will persist like as a trade opportunity still that's like in the market. So yeah, like we look at all those opportunity sets.
So what else is going to go into your decision making in your typical day or trading session?
Yeah, I mean, like, look, like, there's obviously like information flow we have of like what we know is like going on and like where we see certain things getting pushed, and then we like sort of lean deltas in like single names accordingly. But like I said, like it's really like very largely driven just like how financing is like throughout the market, and then like what we're seeing like color wise from like either people that are operating on the cash markets or like the OTC desks or like actually like happening on like the cash market screens at any given time, in particular. So like, those are definitely the big drivers. I mean, like, we'll also just look at like how sectors are like moving, right? Like if suddenly all the staking coins are hot and then there's like a couple that haven't moved, well, like we'll tend to buy the laggards of the basket, and then like potentially like sell just like broad market exposure against it. But like we do a lot of like sort of that shorter time frame, like correlation type trading.
We got a question. What's your favorite crypto asset and why is it Doge?
Why is it this? I mean, like Doge is great in the sense that it's stuck around, right? Like it's a fairly large asset for like how it's been. I mean, it's also like just nobody has like a really strong opinion against anything with Doge in the sense that like it's really hard to look at it and be like that's a scam because like there wasn't like nobody really got rich on it out of the beginning besides people that like just took a bunch of like risk, right? Like the foundation didn't like
the only person that thinks it's
anything.
A scam is Jackson Palmer, and he created
right,
it.
which is funny, right? Like, and he's at Adobe now, or
yeah, he's at Adobe.
Know. Yeah, like it's just like it's neutral. Like it's very much like I think how people view Litecoin too, right? Where like it's there, and like I don't know, like it doesn't like really bother anybody a ton. So like that's like its biggest sticking power to it. So yeah, I don't know that alone has been enough for that thing to like stick around forever. And like it's meme power like matters. I mean, you got like Elon talking about it. Like that's like
it's unreal, hilarious. Man.
Yeah, it is kind of unreal, and it's never gonna go away.
No,
like there was like it survived this long. Like it's just gonna stick around. I mean, like for God's sake, like ETH Classic still exists, and like it's effectively dead. So like
ETH Classic costs like $5,000 an hour to 51% attack, and still people rarely do it. you know.
I mean, there's like something to be said that like if you just last long enough and like stay a certain size, you just like live indefinitely.
Yeah, I mean, yeah, blockchains tend not to die.
Right, they're not like companies that go bankrupt. There's not like necessarily like an end event on them.
Yeah, I want to spend our last few minutes talking about DeFi and your outlook on those things and DeFi season. From a pure price perspective, we've obviously seen DeFi pick up massively after a slowdown that peaked. Let's see, DeFi perp really started losing at the end of August relative to Bitcoin.
Yeah.
But you know, DeFi perp as a baseline is up 125% relative to Bitcoin this year. So my questions are: is it DeFi season? How do you view this type of these type of sector swings or rotations into hot alts in particular out of Bitcoin, and how much room do you think this movement has?
Yeah, like I think the big thing to like look at is like just like zoom out a little bit and like look at like the 6 month, and like a lot of this stuff is still pretty like battered against Bitcoin. So like I think a lot of it was just like you basically got to the bottom of like that ratio trade, and then like it sort of like bounced and like caught its breath. So like I think there's a lot of room to run on some of these things still, in particular stuff that like hasn't like really had a moment that got like clobbered.
Yeah, like Curve comes to mind with that. Like one of the best products, but this crazy distribution schedule and just got absolutely creamed. But it reminds me of, you remember like those EOS charts back in the day before it finally had a bull run? Like they just end up being these huge cups, you know, where they just retrace the whole battering.
Well, because all the sellers have already like gone through the market, and like there's just I don't know, like these patterns like they exist throughout time, right? Like you just like you get an overextended move, and like if it doesn't die, like you don't need a ton to like turn it the other way either, right? Like you don't need a ton of capital inflow to any of these like single names to like really move them. Like $500,000 to $1 million like can be like a 10% move on a lot of these.
Yeah. So where do you think we are in this? So you think we still have some Bitcoin relative gains that they can make?
Yeah, I think there's still like a good amount of that's going to like flow through. I mean, like basically once Bitcoin stalls, these things start going like a little bit wild, and then like Bitcoin will either pick back up again or it'll just be like boring for a bit. So I mean, I tend to be of the assumption that like you probably want to be like rotating out of alts into Bitcoin again, like as this like sort of like all moves through. But like I wouldn't be surprised if there's a good amount left in the tank on like I just like think you want to like start like coagulating those gains back in to like the base asset, especially because like financing's negative, like Bitcoin's pretty beaten up, like it's not like a terrible place to like be like moving back sort of on that side. But yeah, I mean like I do think this is just like the catch up trade more than it is like the outperformance. Like DeFi is probably the one exception because DeFi is like really like blown above and beyond on that part. But like DeFi is also like the hottest thing going on, right? So like you'd expect like the most of the net inflow going through. I mean, you can also make the argument it's got the most utility, but like a lot of these like governance tokens, it's still like super unclear. Like
what do they do?
Like, well, like I have this argument a lot internally, and like we trade all this stuff, and like I don't let it like super dictate like my like risk decisions, but like a lot of these governance tokens that are slapped on to like very useful protocols, it's unclear to me why they command the valuations they do. Like it just because like the underlying is super useful doesn't mean like the token that like governs it like necessarily has to have like a 1-to-1 matching to like the TVL. Like that doesn't always make sense.
It seems like there's an expectation that they're all just going to turn on cash generation that goes back to token holders, and that's almost the entire justification for valuation. Do you think that's a realistic expectation, or does that have a lot of hairballs tied up in it?
It's got a ton of regulatory gray hair, right? Because like that basically means it's a security.
Yeah.
Like so like you can't just skip that outright, especially like some of these projects can, but like a lot of them operate like with some like US like presence. So I'm less than sort of convinced that that's just going to happen, like, and like it's like a foregone conclusion. So we'll see sort of how it plays. But like a lot of them even trade rich to that being like a true thing already. So I'm not like trying to say like the whole thing's like overblown. I'm just trying to like basically be like these things they're trading equivalent to the utility of their protocol, but like it's not necessarily like how they should be trading. But like that is the dominant metric right now. Like just because like the TVL doubles, does that suddenly mean like the token's worth 2x? Like I don't know.
Yeah. I'm not sure either, but we've certainly seen flows go that way.
Oh yeah, right. Like we trade it that way because that's the way it trades. But like I don't think that works forever.
Right. Do you think? But certainly that's bullish. Well, it's bullish on Ethereum itself in terms of what we see with network usage, willingness to pay. I mean, I think I paid 0.1 Bitcoin for a trade fee this morning, or not Bitcoin, 0.1 ETH. Yeah. For a DEX trade this morning, and I was just like, whatever, the trade is more important than the fee.
Right. No, I mean, look, it's been great for ETH. I do think though you're starting to see a point where like ETH is choking a bit, and like people are like actually aggressively looking at other L1s. Yeah. Like the other L1s have performed really well in like January so far too, right? Like all of them have like had pretty big outperformances. So I would suggest that they're being like real sort of like, or at least people are going to try. Right, like you're gonna have like a lot of people raising and trying to like port stuff over to like other chains, like Polkadot being like probably the biggest like outperformer of that group. But like even like ABA has like had like a huge move. Like there's been like other L1s that are like trying to be competitive that are moving pretty like aggressively.
Do you think Ethereum's moat is too big to capture, or do these work together, or do you think does Ethereum have pure blow up risk by not solving the scalability problems quickly enough?
I think there's just too much inertia for like too much of it. But what I do think you're going to see is like newer edge cases or like certain portions of it poured over. So like I would say that ETH's going to have a really hard time like containing everything that it has, but like a lot of stuff is going to stick around. Like it's just like has such a network effect at that point that's going to like matter. But like any new sort of utility or anything that has the ability to be ported over, like there's like a good chance like there's flight on it. Or at least like people are going to like try to make things more cross-chain compatible too.
Yeah, it does seem like there's at least, this makes me a little bearish Tezos in particular, but there's like this agreement that, hey, we're going to do stuff in Solidity, even if it's not perfect. And, anything that's trying to like recreate all the languages that you build your dApps in is not going to have as easy of a time because you can't convert like all your smart contracts over to something very easily unless it can talk to the EVM, right?
Mm-hmm. Yeah, and it's really hard to like get people to do that porting, and it like because like look, there's like not going to be a ton of like users day one, and like you got to do like a lot of work just to get it like over anyway. So like the more headaches you create for people to do it, the like just more it's not going to get done, and like you're really doing yourself a disservice. So like it is a fair. I mean, like look, Tesla's has performed very poorly. Like I don't think that's like random probably, and it's like partially a function of that.
Yeah. What else are you excited about from whether it's DeFi or sectors? Like what do you think needs to be built or think is being built that you're excited about?
Yeah, I mean, like we're pretty public about this because like we're like a big investor in it, and like we are advisors to it and stuff. But like we think that the Serum project that FTX is working on is pretty interesting. We think that there's like a real potential for centralized order book to like sit on top of blockchain. And I think if you can get that going pretty well, there's a chance that you just like obliterate all the mid-tier exchanges, and like that activity starts to like coagulate around venues such as that. So like I think we're going to see that trade at some scale during this year. And I mean, like, Lord knows, like, FTX is going to just, like, will it into life regardless. But we're pretty confident that that's going to be, like, a pretty interesting area of, like, where all this stuff goes. Especially when you start, like, plugging in other, like, on-chain things like leverage, like loans, like, I mean, like, SEC lending, like, kind of like businesses. Like, I think it's pretty interesting to have all that sit on-chain and potentially possible now.
And you said you weren't doing a lot of TA in your Bitcoin analysis. Do y'all use technical analysis when you're looking at like rotation into or out of alts or anything like that?
We look at it in the sense that other people look at it. So like I care only as much as like other people care, but like I in myself do not like think it has like a ton of predictive power in any. But like if everybody's like talking about it, like at minimum it usually means something for vol.
Yeah. Yeah, that makes sense. So when you're bullish on something like Serum, are you usually, you're invested in it from the beginning, or do you seek to add to your position?
From the beginning. Look, I mean, like full disclosure, like Serum is like it's trading at an expensive price all in. If you look at like the full TVL on, like not TVL, but whatever, like the full sort of diluted on it. But that being said, like you may not get a crack at it lower, but like we're investors in it from like an earlier sort of stage, but. And like we keep that position. So like I'm not trying to push anybody in any sort of position, or like you'd have to look like really like what the economics and like what the unlocks look at, like what year you'd want to be like putting a position on. And there's also sometimes better ways, like you get Serum as an airdrop for the FTT that you like own. So it's like a potential way you can like own it as well. But like in general, like we just like have a good feeling about that ecosystem's ability to like build something super useful in the market going forward. But yeah, we obviously hold positions in it.
Yeah, that makes sense to me. I'm more, I think I do actually have some exposure to Serum in a weird way, but that's cheaper. But for, like typically, I'm just going to be looking at a chart of Serum and trying to decide, is this something that, looks like a decent swing trade or something like that. But I like to be able to screen by what do smart people think has real pickup. And DOT was a great example, and this might be the next one. Like I look at the Serum chart, and you say it's expensive, but I look at a chart, and I'm like, relative basis, I'm a pretty big fan. And I'm one of the people doing the TA that, that you don't look at.
Here's the thing, like, but I guess like I guess we're talking like different time frames too, right? Like it's all about like that supply demand balance in like the short term. And if people are like using a lot of Serum, like it's obviously going up. Like let alone like where supply may be in 6 to 12 months from now.
What else excites you in the token landscape?
We're really excited about the on-chain perpetual.
Yeah, like, so there's perp
sort of protocols that there's a couple, like we're in perp, we're in Derivadex, like we're in Serum, which will be like eventually like offering similar products as well. So like we're in all of those. But there's also like Future Swap. There's DYDX's new thing, and they just like announced their round. There's no token necessarily on that one yet, but we're like pretty confident there's going to be real on-chain derivatives trading at scale in the next 6 months. Like it's already starting. Like the perp product's like very good. Like we make markets on it. Like we trade a ton on it. Like we definitely like buy the thesis that some of this like levered activity is going to exist on chain.
Yeah. I'm really interested in what you said there, because in the fact that you think it's just going to blow up some of these mid-tier exchanges. Like I have a hard time believing anybody but the market leaders will be able to survive. Like this seems very bullish, FTX, Binance, Coinbase to me, purely because like how will anyone gain market share when they have either perp perpetual exchanges they can go to that are on-chain layer 2 or dexes like Uniswap and SushiSwap. Do you agree with that?
Yeah, I think if you're a mid-tier exchange, like you got to do something to really differentiate yourself coming forward, because like just being the venue that like lists 35 assets that are hard to like access anywhere else is like gone. Like that's not like a defensible strategy for you anymore. So like there'll always be the cash exchanges, right? Like Coinbase will always exist because like you're gonna have to go to your bank to that exchange, and like that's just how you're gonna like enter the ecosystem, and like that will never like be fully on chain, or at least not anytime soon. So like people will always own the corridors of like the cash market angle, but like if you're an all crypto venue, like you got problems coming down the pipe of like all these venues like coming after you with no KYC and like no downtime, full custody of your own assets. Like that's gonna be really hard to fight against.
Yeah, there's even some that are leaders to a degree right now. Like I think of like a Bybit or some, like I feel like there's some risks for some of those, and they're probably the best of that bunch. But these make me nervous. I've toyed around with a little bit with some of the layer 2 exchanges to see like what are they trying to do, and I mean they seem pretty good for most people. So
I mean, look, they're definitely not battle tested yet, though, right? Like this is still like the very early stages of this stuff like getting out there. Like you haven't had 500,000 people try to use it, like that's like when, or I don't know, like what did Coinbase have during like max load? Like there's going to be like real stress testing and like sort of seeing how this stuff goes, but like so far so good. And I don't know, I think people really are starting to demand more on-chain options for like all their activity.
Yeah. All right. We're into an hour. I don't want to take your time. I do want to end though. You've been through cycles since 2013, so this is your third real big bull market. Where do you think we are in the cycle? I don't need price targets necessarily, but how do you approach trying to decide, hey, we've seen a top, not like a 40K, things got a little dicey top, but
top, yeah.
Top.
Yeah, it's always easy to tell in retrospect. I mean, I think you need to like look at like how much new issuance is there a day amongst like the top 5 in dollar terms, and like how much realistic cash do you see moving into the market on the same timelines? Because like that, if that is out of balance, like just wherever you are is irrelevant, because like that force will just have like a magnet effect, right? Like if there's too much issuance and not enough cash coming in, you're going down. And like vice versa, right? Like if there's just too much buying and there's not enough like issuance, like you're going the other way. So like this is like why I tend to view like the halvings as actually being like quite important, despite like people like saying they're always priced in. But like that imbalance like will sort of gravitate where things go. That being said, look, like there's a lot of issuance every day that's got to get eaten up. It's been eaten up, and there's like a lot of like specifically like institutional interest on the U.S. side that's been able to counteract that. But like I don't know, is it going to be there for 12 months, 6 months, 3 months? Like I don't know. That's generally like where we like kind of like try to see where we are in a given cycle.
Yeah. Do you think a lot of those institutional Bitcoin, like, are they gone for quite a while? Like people really have that long term of a lens, or do those institutions have just as weak of hands as we do?
It seems like they've been pretty weak so far. I think like there's a little bit more career risk in like putting yourself in this position and then immediately puking it, because like you look like an idiot if you like if you're like a PM and you go, I'm going to buy 26 of Bitcoin, and then next week you'd be like, I'm going to sell them. I like was wrong. like that's fine. And like that happens in assets all the time. But like if you made like a big stink and you like put a lot of like your clout on the line to put that trade on in the first place, like you kind of can't just like turn around and like be like, I was wrong. So like you got to like have a little more conviction in it.
Yeah, that sounds awesome. And then finally, we're getting questions, and this is where I'll leave you. Who did you pay or who did you buy $5,000 cookies for?
Oh, for the Masari guys.
Oh, you sent cookies to Masari. What? How many cookies?
I think $5,000 worth.
What was the basis of this? I need the inside scoop. According to Cred,
it's going down on Twitter. You can see it. I mean, like it's just I think normal sort of fundraise.
Nice.
Yeah.
All right. Hey Dan, I would talk to you all day. I know we're into our hour. I really appreciate you joining us.
Anytime, man.
People can follow you on Twitter at CMS Holdings, and then your website is not got a lot going on right now, but they could.
You know why we have a website?
Why?
Because the compliance department at an exchange that will not be mentioned demanded to see our website, and we said we didn't have one, and they were like, well, you can't onboard unless we see your website, and I was like, fine. So we just made that website.
Awesome.
Well, that's why we have one.
Everybody should be following your tweets. There's some real gold in there, and I appreciate getting a little more of your story. I'd love to have you on again and dig in to more stuff in a few months. Maybe see where we are with
see where it all goes. See how wrong I was.
I think you're on the money. I personally, I think this DeFi season probably has some legs left, but agree. I don't want to be left holding the bag once Bitcoin takes over. It is the king for a reason. Right. It can come in and just really ruin the party. Yeah. So everybody give him a follow. Thanks so much for being here with us. Yeah, thanks for having me. And if y'all enjoyed it, you know what? Give us a rating or a review. Let us know. We'll talk to you next time. And use Matcha. Go to ledgerstatus.com/Matcha. Sounds good. See ya.